Happy Monday, everybody. I hope you had a great weekend. I want to wrap up this week with a recap of last week's holiday week and a preview of this holiday week as well. Today is December 30th, 2024, and this is your final Monday market update of the year. Let's start with a quick update on the Santa Claus rally information. Not looking so great today, but let's see how that goes. This is a term that's used to describe the tendency of the markets to produce a 1 to 2% return from the first trading day after Christmas into the first two trading days of the new year. Yes, of course, this is short-term noise, and you know how I feel about that, but it's a good fun fact to end the year on. The term came about from Yale Hirsch of the Stock Traders Almanac in 1972. The stats are as follows. During this period, the S&P 500 is up almost 80% of the time from 1950 to 2022, and the Santa Claus rallies happened 58 times during that time period. Average return in that time period, 1.3%. Adding that in the 9 years out of the last 50, where the S&P 500 was up 20% plus heading into Christmas like it did this year, the median rest of the year performance, 0.82% positive. 8 of the 9 were positive. We'll have to see how this one goes. Again, not looking so good as of today. On Monday last week, the holiday shortened week began with U.S. equity markets showing mixed activities. While markets faced early pressure from higher treasury yields, investor sentiment turned positive as the session progressed. A weaker than expected durable good headlines report was offset by strong core capital goods orders and upward revisions to October data, reflecting resilience in the business investment. As I mentioned last week, the durable goods market was going to be important. The headline figure, as I said, dropped more than expected, but the details showed strength with the core capital good orders. December's consumer confidence index dropped to its lowest reading since September, but markets interpreted this as dovish, boosting sentiment in tech stocks. The 10-year yield approached 4.6%, reaching multi-month highs, which created some early session pressure on equities. The Dow was up a bit less than 1/4%, S&P 500 up about 0.75%, and the Nasdaq Composite up almost 1%, led by the mega cap tech stocks. Tuesday started tough if you were flying American Airlines, as they had a short ground stop the morning of Christmas Eve. Not a great day to have a system problem. They did get back up and running about an hour later, but you can imagine if you were one of those people waiting on one of those planes. Woo! As trading started with stocks moving higher, even with the 10-year yield hitting the highest level since May, over 4.8%. It was a quiet, short day of trading, and markets kept things going and closed in the green. The Dow was up almost 1%, S&P up just over 1%, the Nasdaq was up 1.33%. More big tech stock news. Tesla was up 7.5% on the day. Wednesday, the markets took the day off, of course. Thursday had markets open slightly lower, and it hugged the zero line for most of the morning. Jobless claims, the only major eco data. New claims were close to in line, but continuing claims rose to 1.91 million. That's the highest since November of 2021. Equity markets faced mixed dynamics, stabilizing after an early pullback. The session's highlights included a sharp decline in treasury yields following a well-received 7-year treasury auction, which temporarily calmed markets. However, a late-day sell-off came on, but not too strong. The Dow closed up less than 0.1%. S&P 500 closed with a minor loss of 0.04%, recovering from an early selling pressure influenced by that labor market data, and the Nasdaq closed down just a tick. Markets opened Friday with a bit of a thud and ended that with a bit of a louder thud, but not so much and not so bad for the week. Overall, there was little news following this short week, and as I've been saying, with traders off the desk and not so much news to trigger the algos, swings were big and deep and not so much to be reported. A few notable facts that we should keep in mind as we go into 2025. First, a reminder of what my top 3 risks are to this market. First, political. Started to read and hear more about how this slim majority is not a rubber stamp, and that means a lot. We know that if nothing else, the extension of the Tax Act by December 31st of 2025 is paramount for many people's growth outlook. So we'll see how that goes. Second, geopolitical. And this can be seen just over the weekend. Fires seem to be burning all over the world, almost literally. I watch a lot of the White House drama shows, and we're always thinking, how can so many things be going on at one time? Well, truth is worse than fiction. These shows make things look like it's a walk in the park compared to what's actually going on. Finally, valuations and this market being priced for perfection. We should have a great growth outlook between regulations and pro-growth policies. Refer back to number 1 on my list if they can get them into action. Few things in the market to take note of. Recall that I've been talking about this market seeing rainbows and unicorns, my term for nothing can go wrong. Just look at a few items. You can always find something, but when no one is talking about them, that's when I worry the most. So first, inflows and outflows of stocks. Just a bit of history, largest ever at the time, inflows of money into stock mutual funds, March of 2000, just before the bottom fell out of the market. Biggest ever inflow of money into bond mutual funds, at that time, September 2002, pretty close to the bottom of all that selling. So when the week before last, we saw a record inflow of money into stocks, $62 billion. That was followed this past week by the biggest exodus of money from stocks since December of 2022. That's $35 billion. So a bit of seesaw. We'll see how that goes. Also, let's look at the health of the market. The breadth of this market is weak. We've been talking about this. This is just how many stocks are carrying the load. On Friday, all but one of the Dow stocks were negative, and 9 of 10 S&P 500 stocks were actually down. This has been going on all month. The mega cap techs have regained the heavy lifting job, now accounting for over 50% of the S&P 500 gain for the year. All of that, and for the day on Friday to close out this short week, the Dow was down 0.75%, S&P down almost 1.25%, and the Nasdaq was down 1.5%. For the week, though, bright skies still. Dow was up almost 0.5%, S&P up 0.75%, and the Nasdaq was up over 0.75%. Going into the last few days of the month and the year, the Dow was on pace for a 4.5% decline on the month. S&P down 1%, and the Nasdaq up 2.5%. How's that for divergence? Let's preview this coming holiday shortened week. I don't know about you, but I do like the 2-day week, even if I only get a short 1-day weekend in between. Aside from the airwaves being full of 2024 lists, the best of this and the worst of that, we'll get a few bits of eco data, a very few, some housing data, PMIs, and we'll close the week with the Fed head Barkin speaking on Friday. As the new year gets rolling, watch for the high frequency jobs numbers. Thursday post New Year's Eve, we'll see who's up to hear that. Housekeeping, unlike last week, markets do not close early on New Year's Eve, but they are closed on Wednesday. Today, today looks like it's going to start out in the red, but let's end today with a look at where markets stand going into the last trading days of the week. As of Friday, the Dow down almost 4.5% for the month. As I said, worst month since April. Up 1.5% this quarter. That's the fourth positive quarter out of 5, and up 14% in 2024. That's the best year since 2021. The S&P 500 down 1% this month, also the worst since April. Up 3.5% this quarter, fifth straight positive. That's the first time you've seen that since 2021, and up 25.25% this year, best since 2021. Nasdaq up 2.5% this month. Up 8.5% this quarter, the fifth straight and the longest winning streak since Q2 of 2021. Up 31.5% this year, fifth positive year in the last 6. Those numbers will change in the next few days. Let's see how we end. I'll recap that next Monday. So that is all there is. Remember that with a thin group manning the trading desk, any move can be supersized just because everyone goes to one side of the boat at once, even if there are only a few people on the boat. Come back on Friday for the first planning video of the year. As promised, we'll talk about some ideas to start the year off right. You can always check out my website for more information, and feel free to share these videos. Until Friday, Happy New Year. To all, I'm grateful to all of you, and I look forward to another year ahead. Be sure it is bound to surprise. That's one of my market rules. Always make a fool of the masses. Have a great week and a safe New Year's Eve and a New Year's Day. Now, before we do close, I do want to note the passing of Jimmy Carter. He was known for a lot, but most argue that he did an amazing amount of good as a past president, maybe more than any other modern past president. As of today's plans, the market will be closed next Thursday, January 9th, for a state funeral. This is only the fourth state funeral of a past president since 1973. We'll see and hear more about this. He was 100. Have a good week, and we'll see you next year.